The stock market is in the red. In fact, facing its biggest sell-off since COVID-19. Nifty has plunged 1,160 points. The Bombay Stock Exchange Sensex losing nearly 4,000 points. Investor wealth dropped by 19 lakh crore. Global concerns over what Donald Trump did. He calls it liberation war, but is this the liberation that he's talking about? Trade wars with China retaliating. It's fueling fears of recession, inflation. Indian billionaires like the Ambanis and the Adanis, they too are seeing significant losses. We'll talk about that in greater detail. But first, this report. It's been a day of superlatives at the stock market. Biggest sell-off since COVID. Steepest weekly decline in years. Longest losing streak in over a year. As FIIs turned relentless sellers, even the DII retaining wall could not hold up. Nifty opened gap down, plunging up to 1,160 points of 5.1%. The BSE Sensex fell nearly 4,000 points before recovering later in trade. Investor wealth of a whopping 19 lakh crore rupees wiped out. All sectors were in the red, led by metal, which was down more than 8.5%. Media, IT, energy and public sector stocks were the other losers. While the root of the chaos is the massive burden of Trump tariff across the globe, other elements have added tadka to the mix. China rattled world market by retaliating with its own 34% tariffs. Beijing's stance that it will not fold under pressure has sparked concern of an all-out global trade war. The trade war is also expected to drive up inflation, shrink corporate profit, and hit consumer sentiment. There could be a delay in rate cuts, and in the worst-case scenario, lead to global recession. Every major stock market around the world was deep in the red on Monday, especially after Trump's comment on bitter medicine.
I don't want anything to go down, but sometimes you have to take medicine to fix something.
Meanwhile, in India, FPIs turned net sellers again in April after turning buyers in the cash segment last month. Till Friday, FPIs had sold off Indian equities worth 13,730 crore rupees. What has added to the concerns is the Nasdaq officially entering bear territory on Friday, falling more than 20% from its recent peak. The sell-off in the market has hit retail investors, but it has also wiped out a considerable fortune of India's richest. According to Forbes, Mukesh Ambani lost $3.2 billion, Gautam Adani $3.4 billion, Savitri Jindal $2.5 billion, and Shiv Nadar $1.2 billion. Meanwhile, investors now have their sights on the RBI rate decision on Wednesday and the earnings season, which begins with TCS on Thursday. Bureau Report, BTTV. Will it get worse before it gets better? Joining me now on this India Today special broadcast is Siddharth Zarabi, editor, Business Today. Also with me, Shailendra Bhatnagar, editor, Markets, Business Today. And Siddharth, I want to ask you first, when Donald Trump called for Liberation Day, that Liberation Day truly hasn't liberated either the US or markets across the world. They're in the red.
Absolutely. And if that was a historical reference, Liberation Day actually meant the United States and going out and fighting a good war to liberate many, many countries. But be that as it may, the key point here is, why are we seeing this sea of red in the United States and all across the globe and the Indian market? The simplest answer is that we knew this was coming, but no one, Gaurav, knew that this would be to the extent of the kind of tariffs that have actually been imposed. Why did these numbers come up? Because by various accounts, President Trump was provided 4 or 5 options to fulfill his dream of reciprocal tariffs. He chose the one option that had the highest rates and then came up with some calculation. His advisors came up with a calculation. That's why you have China at 54% and India at 26%. Although the tariffs that we actually impose on the United States are less than half of that. So it's the absurdity of the calculation and the consequences for growth and the consequences for supply chains that we are seeing pan out. In some ways, Gaurav, this is a double whammy. This is a bigger black swan event than even COVID.
It's a bigger black swan than even COVID. How long is the impact likely to be? Because China, it had threatened retaliatory tariffs. It's imposed 34% retaliatory tariffs on the US. Stock markets are in the red world over. So how long do we go through this bloodbath?
Gaurav, that's the difference between COVID and this. COVID was a time when the globe came together to fight it out. Right now, everyone is fighting it out against the United States. So you have heard reports of 50 countries queuing up with the United States to negotiate deals. Vietnam, among others, seems to have offered a full capitulation. But what is happening? China and the European Union are not going down without a fight. So this means that this is not a one-off skirmish. This is a battle that will continue. And unlike President Trump's first term, because of the gigantic, enormous scale of this exercise, even an island only inhabited by penguins getting hit by tariffs, no one knows where it will go. And US companies, US consumers are going to bear the brunt of it because their supply chains, their current pricing models have come under serious and severe question. And that is why the United States and its markets, when they sneeze, the rest of the world catches a cold, and that's what you're seeing.
And Shailendra, this does appear to be worse than a common cold. This is bordering pneumonia, is it? Or 19 lakh crore wiped off the stock market. What can India do in a situation like this? What do you anticipate RBI's expected rate cuts would be? Would that impact investor sentiment at the stock market here?
Gaurav, I don't think so that a paltry 0.25% basis point rate cut from the Reserve Bank of India maybe 2 days later will do anything to the sentiment. This is a fight between two very large elephants, which is the US and the China, and it is smaller markets like us which are getting thrashed beyond recognition. Remember, even the Chinese markets fell about 12.5%, especially Hong Kong. Today, because they were already up quite a lot and there's a lot of profit to be made, we in turn have already corrected quite a lot, and today's fall was even more dramatic. The only thing that we can hope for is that politicians in particular and some bureaucrats, some central bankers sit together and they chalk out a plan to cut down volatility and somehow return normalcy to the markets. Otherwise, it's the falling knife. Across the board, it's not just India, it's not just equities, it's commodities like gold and copper, in particular gold, copper and oil, which have fallen dramatically. They are all pointing to a severe slowdown in the global economy, a recession perhaps in the US, and therefore stock prices are reacting to lesser earnings in the pipeline.
And Siddharth, the recession that Shailendra was also talking about, markets crave stability, markets crave predictability. In this kind of a situation where no one knows, in this game of brinkmanship when it comes to the America and China, how will either leader react or how will either country react? The world facing that impact, people queuing up to negotiate with Americans, but not knowing how long will those negotiations continue. So do markets continue to tumble, or, is this like a bottomless fall?
Very hard to predict and forecast market behavior at this stage, but let me try and give you one example. Apple iPhones, beloved of hundreds of millions of people all over the world, including the United States, are manufactured almost entirely in China or India. What is the duty now imposed on Chinese exports to the United States across the board? 54%. What is it in India? 26%. Understand the likely impact on consumption. And therefore, unlike COVID, where everything shut down and was preserved, here everything that has been created in terms of a global economic order, the way of doing trade between countries over 40, 50 years has now been unraveled. No one knows what the road is, and all roads lead to Washington, D.C. and one office, and the incumbent there is not necessarily known for perhaps being very logical. He's a deal maker, but till you sign the deal and till it happens, no one knows what is happening. And one quick point, Gaurav. If you go across checking with people in India, shrimp exporters in coastal India, textile exporters in India, some others, JLR, Land Rover overseas, trade is coming to a standstill across many, many sectors. People rush to export goods before the 31st March deadline, knowing 2nd April was happening. So the impact is very, very, very confusing, and people don't know what will happen a month down the line. The only silver lining, Gaurav, is if President Trump takes into account the pain that his markets and his constituents are facing and perhaps decides to pause, because very influential people in the United States are asking him, beseeching him, give 90 days to the world to come to the table with you, and until then, take pause.
Will he take that 90-day pause as several experts expect him to do? Because Shailendra, there are also those who say that when you look at the trajectory right now, this will lead to a recession, as some argue, and are they exaggerating when they say this could be as bad, if not worse, than 1929?
Well, Gaurav, I don't think so it will be that bad, because you see, the world also knows how to get out of it or not get into it at all. We are in a connected world. 1929 was way, way different from what it is now. My understanding is that there will be, in the next 1 week or so, some kind of a backdoor negotiation between top 50 people across the world, and they will come to a solution. Till that time, markets will remain volatile. I just want to add one particular line. To take benefit from these falling markets, see, what will happen is that the world is not coming to an end. Equity markets will continue to function much, much after Mr. Trump is gone and many other people who are creating the problem have left this world. So the most sensible thing to do at this point of time is to buy the market piecemeal through quality mutual funds, put in quality SIPs into 1 or 2 large cap funds, and if you have SIPs in the market, do not stop them. This is the time to buy quality assets at a far lower price than what they were 6 months ago, 2 months ago, 1 week ago. And if you have this systematic plan in the mind, you will definitely come out a winner.
So is that also your appreciation? This is the time when the brave would take a risk, and greater the risk, greater the gain?
Honestly, I am personally looking forward to the successful conclusion of India's conversation with the United States for a bilateral investment treaty. We have early mover advantage. We have put in a lot of political capital behind this conversation in the second term of President Donald Trump. Remember, in the first term, we had also done some kind of retaliation. This time, we are choosing a completely different path. Prime Minister Narendra Modi has told all negotiators to focus on getting the deal done without any rhetoric. This is what my sources have been telling me. And I think that in itself, the sooner India gets a good deal going with the United States, that's what's going to lift all boats with this tide, which otherwise seem to be sinking at this point of time.
On that heartening note, on that note of hope, Siddharth and Shailendra, many thanks for joining me. So India had the early movers advantage. What will it lead to? Conclusion of that BTA, that bilateral trade agreement, and as quickly as possible by fall. We'll be tracking that story very closely. Gentlemen, many thanks for joining me.